Okay, so it's 7:07. So I think it's good time to start. So we have the pleasure of having Sumit Ghosh, co-founder of Chingari. The GARI is their currency or their cryptocurrency, as I would call it. So it will be a very interesting story to hear from Sumit in terms of how they, took an opportunity when TikTok was sort of banned in India and how they moved their business. And today they are, I think doing extremely well, especially in the global markets. So without much ado, I would ask Sumit to share with us his story. Sumit, this group is a group of angel investors who have taken an interest to understand how we can, invest in blockchain startups. So this is the process of, getting educated from experts. So we've had a number of experts in this space who have, shared their journey with us. And you are like the first founder sort of who is going to tell us from the founder side of things.
Sure.
Absolutely. So go ahead, Sumit. The floor is yours.
Yeah, thanks. Thank you, Harina, first of all, for inviting me today. Like Chingari's journey can be basically broken into two parts. One was the pre-TikTok era, pre-TikTok ban era. So we started in 2018 as a app to create something for Bharat. So I will give you a small background on how it all started, how the team came together. Because most people know the later part of the journey after TikTok got banned, and then we invented GARI and the DAO and the Web3 pivot. But nobody knows the backdrop, like how the team got together, or very few people know about it. So I think that's a very interesting story. So me, Deepak, Biswa, Aditya, we wanted to build something for Bharat, and this was the time when Reliance had launched Jio, and suddenly there was a huge influx of 4G users. And ShareChat has gone ahead and announced a raise of $100 million from Shunway Capital and Xiaomi. So we thought this is the perfect time to build something for Bharat. And one thing that we noticed was, user behavior wise, ShareChat was like a dictionary of images and videos which people used to download and share on their WhatsApp groups. So we wanted them to we wanted to create a creator sort of a platform for them where they can like create short videos. One thing that we noticed about user behavior was that these users love to share WhatsApp stories, and there was no tool to create WhatsApp stories. So basically, if you look at Chingari's version 0, you will see placed in the Play Store title WhatsApp status story creator. That was Chingari. So that was like this version 0 of the app. We never thought that we'll become a short video competitor to TikTok, or one day we'll invent Web3 version of TikTok. That was never the plan. It all happened while we were building. The team was really fast in terms of understanding market trends. And so while we were building this, suddenly there was this app called as Mitro, which came in, and it got like 5 million downloads on the background of anti-China sentiment in India. So I thought, I'm a way better marketer than these guys, and we can do much better. So I launched an Instagram meme campaign, and suddenly Chingari got the visibility that it deserved. And we did it on the background of the anti-China sentiment again. We used that. And then suddenly TikTok got banned, and there was this tweet by Anand Mahindra that I have downloaded Chingari but not downloaded TikTok. And suddenly we were in the limelight. In the week of the ban, we saw like 100,000 users downloading the app every hour. And then we raised some equity, from AngelList, even Lex Venture, Bloom Ventures, then we raised 2 rounds of equity capital. Collectively, we were able to raise around 50 million in 3 rounds. And while we were doing this, there were other heavily funded competitors who jumped into the same market. So ShareChat jumped with a product called as Moj, and then we had when the ban was announced, there were like 10 competitors. Z announced Hippify, ShareChat announced Moj, Daily Hunt announced Josh, MX Times launched MX Tagada, which they eventually they gave up on the journey and sold it to Moj, and made an investment there to have a consolidated stake in that business. So like 10 competitors came up, and there were the older competitors, they all died. So Mitro died. They recently sold to Ku. It was like a share swap. And there was one more guy, Roposo from InMobi. They also the product is basically dead. They have pivoted into an on-screen lock screen product, which is nothing to do with short video. So at this point, I saw that there are two heavily funded competitors Like Josh has raised some 400 million. Moj has raised another 400, 500 million. And we were like, a small, tiny competitor with barely 15 million Series A. How will we compete with these behemoths? So this was, this was like a point where the whole team went back to the drawing board and saw that, okay, we have users, we have community, we have loyal users, like, people love Chingari. So how can we make this work? And this was the time when cryptocurrency, DAO, was like DAOs and Web3 was not the buzzword. Like it became buzzword in 2022 when we launched, and then Polygon became big this year. So now, and then Andreessen had its $2 billion fund, which is actively used to fund Web3 startups. So this year it became a buzzword. But GARI started, we were building GARI since 2011, like Jan 2011, when we had closed our Series A. So we went to the drawing board and we realized, okay, we have users. And then I have been not a builder in blockchain, but I have been following the blockchain space for a while. So I understood, like, cryptocurrency, blockchain. So I had a basic background of blockchain, but never actually got an opportunity to build. So I was, this was a time when I was, also like reading about, and then a game called as Axie Infinity came into my reading. Like I went basically to, like, it's like fate or whatever. It came to me, and then when I saw Axie's model, I was like, these users are growing Axie's business, and Axie has just 2 million users, and it is able to sustain just because of its Axie Access token and SLP token. So we thought, why can't we do the same for Chingari? Just tokenize this and build a DAO and let the users control everything. And this is when, so one of this is when I bounced off this idea with a couple of my investors. So one of the investors in our cap table called as Republic Labs, they had a token advisory service called as Republic Crypto, which also led all our crypto rounds. So they helped us raise more than $40 million in crypto, did our public sale on their platform, got everyone in the crypto to invest on Chingari, KuCoin Ventures, Alameda Research, Weller Equity Partners, all the top crypto investors, you name them, I have them in my coin table. So they staged it together, and then they advised us like how we can make this work. So how to put this together as a DAO and give back ownership to the community. So if you look at Facebook and YouTube or Instagram today, I will give you the differentiators between these Web2 companies and between Chingari. So essentially what a Web2 company does is it harnesses user data, monetizes the user data, and keeps this money in the balance sheet of itself. So with every new user, Facebook monetizes and keeps that money in its balance sheet. On Chingari, when a user joins and we make money, we give 90% of this money back to the user via GARI tokens. Also, every content that you upload on Chingari becomes an NFT on Solana, or like eventually it will be cross-chain. So you own your content. Every time this content is bought, sold, and traded, you make money. So basically, users own their content, unlike Facebook and Instagram, where the platform owns the content. So it's a self-owned, self-governed, distributed, Web3 platform. Also, GARI is a DAO. DAO means decentralized autonomous organization. So every Chingari user who holds GARI tokens can actually vote on the future of the platform. So the GARI holders can actually put up a vote, put up a proposal, and all other GARI holders can vote on that. And then the DAO, will have to basically align itself with that particular. So it is like a distributed decision making, not like a centralized decision making like Facebook. So the community decides what would be the future of Chingari. And recently we launched something called as Earn to Engage to Earn, which is like we have coined the term GARI mining, which is nothing but Engage to Earn program, where our creators and users earn GARI tokens for spending time every day on the platform. And how do we basically offset the emissions of the token is that every day we give out 50,000 tokens to the community, and we try to make ad revenues, which is more than the net worth of these 50,000 tokens. This way, whatever tokens are actually whatever tokens actually hit up into the market, the company can buy them back and sustain the token price. So unlike Axie Infinity and StepN and similar play to earn gaming models where they have a dual token model, which eventually leads to collapse, Chingari can sustain with 1 million, 2 million, 5 million daily active users because we have a third party ad revenue coming into the platform, which can be used to sustain the token price. So in short, like this is the gist of the business, gist of the story. And yeah, happy to answer any questions around what we did, how we did.
So Sumit, you started as an Indian company, right? But
Yeah.
today you are sort of global. You are in the crypto world, right? So from a regulatory perspective, what are the things that you had to do in order to transform yourself from a Indian Web2 company to a Web3 company international?
Sure. So Chingari is still a Indian private limited entity. Chingari runs the technology platform. GARI is a Cayman BVI structure. So we hired one of the best law firms in the US called as Ketzel. They have done more than 100 similar structurings for US based, UK based, Singapore based companies, like token companies. So they created the Cayman BVI structure for us. And GARI is basically a DAO. So anything related to the token is done outside India. The tokens have been issued from an outside India entity. And although right now 90% of the Chingari user base is Indian, but we have launched in Indonesia, UAE, Southeast Asian markets, and we have recently also launched in US. We did like a big launch in NYC, NFT, bought like a huge Times Square, billboard, advertised there for 3 days. So we recently also launched in US. So now it's like a multinational, multi-geographical, business. So Indian regulations are only Indian regulations are only related to the Chingari entity, which is an Indian private limited, and for the crypto entity, we follow BVI and Cayman laws, and it governs all the international countries. So in the US, we are compliant with SEC. In India, we are compliant with SEBI and income tax and FEMA, FERA, all those law firms. And wherever we are, I mean, the BVI and Cayman entity will basically comply with local laws in that country for those country users.
So one more question: in the current meltdown, what happened to your market cap?
Unfortunately, the whole market is down, but GARI has gone up. So when the meltdown started, GARI was trading at 40 cents. Today we are trading at 75 cents. So
wow, that's great.
Yeah, so we were one of those tokens which has a real user base, real utility, real revenues, and like proponents in this ecosystem like Sam Bankman, Sam Fried Bankman, and CZ from Binance, they have been saying time and again that projects which have real revenues will only be those projects which will sustain this downturn. So we have seen like a lot of projects which were just pure marketing without any real need, they will all collapse during this downturn. Projects which have real revenues, real users, real use cases, they will be able to weather this downturn and come out stronger when this downturn is over. So Chingari GARI has not really been affected. I mean, our user base are still, they're still using the we are making revenues. In fact, we have launched mining in 12th of this month, 12th of last month. And within a month, we have made $500,000 of revenue just by selling NFT badges to our user base. So, and this mining feature itself will, I think, make like $20-25 million in the next one year for the platform. So it's very, very promising. I mean, as long as you have real use cases, a real user base, you'll be able to sustain.
Great.
Sumit, just a question, coming from the banking side, one of the concerns that's been there is, the use for money laundering, using the cryptocurrency for money laundering. What kind of steps can you take, as an organization, as a platform, as an organization, to not get caught in that madness? Because I mean, you can't really control the users, but the reality is you could get exposed as a kind of a backlash.
Yeah. I mean, money laundering has been a problem, a real problem with the crypto exchanges in India. In fact, WazirX has, multiple times been summoned by ED for, this Chinese note ban. But I think as a platform in Chingari, the quantum of money that we move on a per user basis is really, really small. I mean, if a user makes 50,000 rupees a month, that's a huge quantum of money for him. earning in the Chingari platform. Whereas in exchanges, a user could be moving 5 crores, 10 crores, 50 crores, and they can do that easily, but not on Chingari. So on the platform, a user can move ad max at a user level 10,000 to 50,000 rupees, and we follow the banking AML, KYC, AML so anybody earning more than 50,000 on the platform has to by default go through a stringent KYC AML process, prove the source of income, and then we will be able to use and transact and basically use the platform. So in our case, we won't be. I think we won't be exposed to the kind of fraud or kind of money laundering that is happening on the exchanges. They are exposed to much bigger players. At Chingari, we won't be exposed to those kind of players. But yeah, I mean, there is always a chance that at smaller level also some kind of scammers or spammers can get in and try to abuse the system. So we are taking enough steps in the KYC AML process to ensure that the money flowing into the ecosystem is clean.
Thank you.
Sure.
Does anyone want to ask Sumit any questions?
By the way, so stats wise, we are the largest on-chain social media app in the world today, not just India. Globally, Chingari and GARI is the largest on-chain app, also the fastest growing on-chain app. And the opportunity here is to basically bring the 3 billion social media users into crypto. Right now, there are some 300 million crypto users globally. So for the opportunity for Chingari is to bring those who are not in crypto but are social media users into crypto. That's like a $1 trillion opportunity in my sense. And yeah, I mean, a lot of users, not just Indians, but globally, a lot of users have earned GARI tokens or mined GARI tokens as their first cryptocurrency. GARI wallet is their first crypto wallet. So GARI is like their gateway to crypto so far. They have never used Bitcoin. They have never opened an exchange account. But because of Chingari, because of the GARI wallet, they're being exposed to crypto and learning more about cryptocurrency. So I think we have that opportunity of exposing, next 100 million, 200 million, billion users to crypto.
Sumit, Jaideep Mehta here. Thank you for a lovely session. My question is actually revolving around what you just said. One of the things I always wonder is, beyond the early adopters and the tech evangelists, how do we get widespread adoption of not just platforms like yours, but blockchain-based consumer-centric apps in general, given the complexities? And frankly, the government is pretty much come out against cryptocurrencies of all sorts, not just in India, but in different parts of the world. The central bankers have been quite vocal for whatever reason. I mean, I'm not getting into the merits or demerits of that, but definitely very curious to know what your thoughts are in this matter.
Sure. See, I mean, the first decade of blockchain, the first decade of crypto was about building infrastructure, getting it, and this happens with any technology, any new technology. So I think if you look at how internet evolved, the first decade was about those tinkerers, about those evangelists, or about those those hackers who were sitting in their mom's basement or dorm rooms and trying to hack TCP/IP protocol and build out those first telnets and first websites, the web 1.1 version of emails. And then we had like corporations and companies getting into internet, investing into internet, and let's call that web 2, where we had the where user experiences got better, like and then social networking came in. So applications got built on top of internet, which was user intuitive and easy to use by users. So end users had no idea whether it's TCP, HTTP, HTTPS, what's going on behind the scenes. They were just seeing a screen which they can click few buttons and send out an email. I think crypto is in that phase where the first 10 years were about building those HTTP, TCP, the layers are the infrastructure is now built. Now it is the time of consumer grade applications like Chingari, step in Axie Infinity. So I think in blockchain, gaming and social will be two areas which will drive the next billion users to blockchain. And when I say gaming and social, these are consumer specific applications where consumers don't care what is they just want to play the game. They don't care if it is a in the backend you use MongoDB or in the backend you use Solana to settle the transactions. They just want to play a nice game. But on top of it, if they see, okay, I have an advantage where I'm getting my game state or my game progress is being saved as an NFT, and when I leave the game, I can still sell this to someone, and I can still make some money out of this game. They will obviously prefer playing a blockchain based game. Same with social. I mean, I'm spending time on Instagram an hour a day and I'm making zero. I upload content on Instagram. I don't own that content. So why will I do that when Chingari gives me money for spending GARI tokens which is essentially money for spending time on Chingari, and owning, also gives me ownership of my content and the platform. So I think the fact that now consumer applications are being built on blockchain on top of these layer ones, we will see more more users in general, consumption growing for the blockchains. Even like users without even knowing or realizing that they're using blockchain for the settlement. So in the first 10 years, you had to go through the painful process of creating a Bitcoin wallet, going to an exchange, opening an exchange wallet, or going to a DeFi platform and understanding how to withdraw money, exchange tokens from a DeFi platform or DeFi exchange. So I think that will be solved by consumer grade applications like Chingari, where you can just open a new wallet by clicking few buttons and you have a Solana. So in Chingari, opening a Solana wallet is like 5 clicks. You just have to put a pin.
I get you, man. See, very honestly, I understand that. My question actually was more around the fact that, see, all through your narrative, you talk about people being able to earn cryptos with various activities that they do. I'll just leave it as food for thought. It's not really a question. The trouble is that the government doesn't want those cryptos in the ecosystem. You see, now that might change over a period of time, but I do wonder, and I guess this is a issue for all of us to debate collectively, but I do wonder what the journey is going to look like and how we'll be able to convince the dinosaurs sitting in various central banks that this is actually the way forward and that they have to give space to cryptocurrencies, just as they've given space to, different types of asset classes and so on and so forth, right? Right now with the TDS rules, with the 30% tax, etc., the lack of write-offs, it's quite clear which way the government is headed and what their attitude is. But I understand. I mean, there's only so much we can speculate, I suppose. But thank you. Appreciate your answer.
I think the government is not really looking to, right now they don't have a clear, I would say, understanding of the space, and they don't have a clear strategy for the space. They are just, and one thing is clear, like obviously the central banks, RBI is against this because they understand that all the central banks will be eventually finished. Like, there is no requirement for a central bank when cryptocurrency will be everything. I mean, why do you need a SWIFT when I can send, $100,000 from anywhere, any part of the world to anyone in just few seconds, without a complicated paperwork? So RBI or all central banks understand this, that they will eventually be worthless. So they will try their best to remain in power and remain in control of the currency as long as they can. But I think it's just in India that the government is taking a step-by-step approach. One good thing that they have done is introduce taxes, which actually means that, okay, they are looking to legalize this, not like outright ban it. At least we are better than China in that way, where the Chinese entrepreneurs or Chinese businesses cannot innovate in crypto in their country now because of the outright ban. Here, okay, I mean, okay, we have 1% TDS, we have 30% tax. I mean, any legit business has to pay 30% tax. 1% TDS is a bummer. Eventually, I think the government will figure it out and get over it. But I would say as an entrepreneur, we are in the right track. At least outright ban, it's better than an outright ban.
No doubt. All the best, man.
Sure. Thanks.
So one question, last question from my side. What is the future for Chingari? Are you going to get acquired, or are you going to go do IPO, or?
Yeah, we are. Yeah, I mean, we are not going to sell to any Web2 company for sure, because the idea of building Chingari was to disrupt all the Web2 businesses, or is to disrupt the Web2 businesses. In fact, I think 10 years down the line, companies which have not evolved themselves around Web3 and DAOs will cease to exist, and we have seen this happen across the internet. Siebel was the #1 CRM tool. They were so bullish about desktop that desktop will be the desktop, and desktop cannot be replaced. And the internet came and Salesforce came and crushed them. I think this is the same journey where Web2 companies are being bullish about, okay, we cannot be disrupted. And I think next 10 years, I'm not saying in the current shape and form, but Web3 will evolve. But in the next 10 years, if you don't evolve your business around Web3, you will be disrupted. And then Chingari will be one of those disruptors, especially in the social media space. So we definitely don't want to sell or be acquired to a Web2 entity. For Chingari, the ultimate aim is getting a NASDAQ or getting a NYSE listing. And GARI is already listed on multiple exchanges. It's a publicly traded token today. More than 700,000 holders are holding GARI tokens as on date. And it's the fastest growing token on Solana. Very soon we will be on Avalanche and Binance Smart Chain as well. So the future of GARI is being a multi-blockchain token.
Thanks a lot, Sumit. It was a pleasure having you, on behalf of all the members of Indian Angel Network, and especially this group, which is interested in blockchain. Many, many thanks for taking out time and educating us.
Sure. Thanks, everyone. Thank you. Thanks, Arida. Bye.
Thank you. Bye.
All the very best, mate.
Thanks. Bye-bye.
Okay, now, I will hand over the floor to Sandhya. Can you please run the startups in the order that you want? Rishabh has also got one, and they will also be presenting. So Rishabh, you please.
Yeah, maybe Rishabh can start, and then Oren and Sonia are there, so they can come after that. Not an issue, as per the plan.
Yeah, either ways. So there's Aaron and Martin from Standard DAO in the US who are joining in for this. Hari, can you please make them the panelists as well, so that
yes,
they can?
Yes. I've made both Oren and Martin as panelists.
Okay, perfect. Aaron, Martin, you guys are here?
Hello. Yes, I'm here. Aaron, are you there?
Super.
I think Aaron's having some difficulties here.
He's saying he's not a panelist as yet.
Aaron, can you just log in again? I've made you as a panelist.
Yeah, maybe log out and log in again.
Okay, I'm making you a host. Aaron, can you just re-enter the webinar, please? Aaron is also a co-host. I don't know why.
Okay, just logged in again now. 1 second.
Perfect. Hello, everyone.
Yeah.
Thanks for adding me. Glad we got that figured out.
Yeah. Okay, Aaron, I think in the interest of time, it's probably best if you start right away. if you could just introduce yourself and then talk about Standard DAO.
Absolutely. Hi, everyone. My name is Aaron Rafferty. I am one of the co-founders at Standard DAO, Martin being the other co-founder. From the US, we're actually based out of California, the entity of which is actually based out of Caymans and with the BVI starting entity. And Standard DAO was formed about 8 months ago, and with the idea that crypto is more of an unbacked asset today and not something that has true revenue. So the thing that Standard DAO does is it's an infrastructure-based project where we are funding initiatives that bring true revenues back to an asset class and bring assets behind a token as a reserve asset and reserve form of crypto, and exactly kind of how that works and what that looks like. That's a lot and more in depth, and I'll let Martin go into a little bit more on his background as well.
Yeah, so I mean, as Aaron said, I think you hear this all the time, but crypto isn't backed by anything, right? And that was our core thesis around wanting to change that rhetoric, right, and make it something that's much more sustainable in nature. I think with the recent events of Luna and the market in general, it's definitely been something that's validated that these pump and dumps just can't move forward. There has to be more substance in the market. And so really, right, our core understanding is to support the adoption, right, of the internet. So I think Chingari is a great example of Web 2 moving over to Web 3. And in order for that to happen, there's infrastructure that actually needs to be in place, right? And so if you think about what it is today in Facebook, Amazon, it's your cloud servers, right? It's your storage, it's your database, it's basically the cloud. And right now we're seeing everyone in the space really rebuild the infrastructure of the internet. And so the great part about that for Web3 participants is that now, the people can actually own those networks in a capacity, right? And really benefit from the activity that's layered on top of the adoption. And so I think for us, it's great to see like products like Chingari, because we're really the ones wanting to support the core infrastructure of that product being enabled. And by doing that, right, we are incentivized to do so. So anyway, my background is finance. Traditionally, it's always been about understanding financial instruments, derivative swaps, things along those lines. And so that's why, crypto, it obviously interests me from more of that apparatus, because really it is a financial instrument, or it's a new one. But, I think we've also learned that it's also much more than that, right? It's going to be this revolutionary, new web infrastructure that, over the next 20 years, there's going to be some very interesting things happening. But, Aaron, I'll kind of pass it back over to you. I didn't know if you want to share the deck.
Yeah, I can speak to it pretty well at this point. And so, Martin speaks of the transition from Web 2 to Web 3, and actually from Chingari, that's a big push for them as well. And so as we see that push coming forward, you have firms like A16Z, they have 4.5 billion that they're deploying towards Web3, different apparatus, right? And that's to build on top of the infrastructure of Web3, because what really happens at the end of the day, you can build networks that everyone owns, but those networks are meaningless unless you have users and unless you have the underlying infrastructure that enables the shared value between all users. And so what we're building is the ability for all users to actually capture a piece of the revenue of the internet, specifically the internet of Web3. And we do that through our DAO approach. We do that through specifically creating a mechanism where we have two kind of sides of the house for Standard. If there's a treasury that backs one token, one side of the house on Standard's protocol is you actually have equity holders of the protocol. And those equity holders, they get a say, they get a vote. They actually also earn a portion of the revenue and fee share of the entire network. And then on the other side, what we're creating is a mechanism by which with Chingari, they even said it, that they have NFTs for every one of their users, right? And every one of the users' videos that they create, it becomes an NFT on Solana. Well, that's really great because, you know, for them, that becomes, you know, a video that tracks the usage and tracks the amount of views that you get in the Chingari platform, where you can earn Chingari tokens. But what if you could actually track into that NFT, earn another source of revenue? So what we're creating is the ability for any project, any NFT holder, and any person in general to also pair revenue streams from the underlying infrastructure, which is the staking mechanics of different networks like Solana, like Ethereum, like any of these other ones, Avalanche, whatever protocol it is, you name it, we're going to have all of the staking platforms, specifically starting with Ethereum first, to where you can bond that revenue stream of staking, which is one of the most sustainable revenue streams in Web3 today, to an NFT, to where you're tracking the yields and it tracks directly to that. And we'll be able to actually provide that as a source of revenue for any holder of that NFT. And that NFT holder will be able to claim these revenues, and it'll be actually a source of income for these folks. And what we see actually happening is, first of all, when that happens, the majority of NFT holders today, they're going to say that, you know, they actually want a source of true revenue behind their NFT. But then what happens for us is the assets or the purchase price and acquisition costs of that NFT for them, we actually put those assets into our treasury and put them to work for that individual, giving them the yield. The treasury then takes the asset, and the asset is what backs the token. And so these are mechanics that actually aren't in play on the market today. These are things that if UST did have some kind of backing to their stablecoin, then we wouldn't be seeing this big dearth in the market and the cascading liquidities events happening further. And that's kind of one and the first mechanic of sustainable source of revenue that we plan to bring into the token. And kind of the next phases as we go through are bringing more sustainable sources of revenue from all areas of the network into Web3 specifically.
So you are doing a fundraise right now?
Yes. So currently we launched a fundraise at the end of April. That funding round was largely community based, and we basically went out to our community, which is, you know, specifically within what we are trying to build as a DAO. And we raised about 720,000 DAI so far. And that is now kind of our impetus to go out to institutions. And specifically, we're speaking to a few VCs to get basically the remaining of the institutional funding for this round. The entire round we're looking to fill is $3.5 million for the product build. And so that's very kind of important that there's actually two ways that we're speaking with certain individuals, key individuals, to participate. There's one way on the funding round side to support the development of the protocol, but there's another way specifically, and we've only shared this with a few, but given, you know, the stature here, it's on the side of an asset allocator. So as a treasury, there needs to be a certain amount of assets that go into the treasury before it even launches. And so that for that, we actually are performing asset swap to fund the initial kind of start of the treasury. And that is something that basically we're looking at funding a more substantial amount to make this specific protocol mechanics kind of fine-tuned from the beginning.
Thanks.
Yeah. So Aaron, would you like to share the deck and maybe people can get slightly better understanding?
Absolutely, Rashad. I can share the deck. So this is what we spoke to at the beginning here. Specifically, today, Web 2, and this is what we've heard with Chingari, in terms of it's lacking the ability for all stakeholders to participate. And so I'll kind of move past this part. So what we aim to do is really build these circular economies, specifically sustainable infrastructure for the Web3 space. And it starts with the validator economy, of which everything is built upon. And then we kind of transition into the remaining economies, which the next one is the gig economy, data economy, energy, and real estate. And the way that we actually are looking at the gig economy today and how that is truly tangible within our DAO, we have actually built the mechanisms to onboard a number of users. And from that onboarding, we've launched kind of and backed in to a structure in which we are recruiting a number of users and placing those users at other companies. And so recently, and just to note this, we've recently secured a partnership with Polygon that we have yet to announce, but we're placing the specifically the candidates in the Polygon ecosystem now, and we've secured that contract. So that's one of the exciting kind of side steps that is the first step to the gig economy that we see. The next step is to bring all of that revenue and revenue fee share on chain. So that will build on top of the validator economy. And to give more kind of clarity around the way that this occurs, we've got this figure that shows exactly how the process of the token backing occurs, to where a user comes in, funds a mandate. Specifically at this point, this will be a validator economy mandate. So you bring in as a user Ethereum to receive SDA tokens as your bond reward. And the treasury then would take that Ethereum and stake the Ethereum and back that Ethereum staking rewards for the token. And so I'll share some on the tokenomics, specifically kind of how this breaks out at this point. So we have 1 billion of vested supply before the launch, in which 60 million tokens will be for kind of the first round of investors. We plan to do a secondary round after that with 40 million tokens. So that 60 million is for the $3.5 million US dollars being raised, or specifically DAI. And then the next round, we expect to do roughly 20 to 40 million in a growth phase before the launch of the protocol. Is there any questions before I move on, just to show the overview of the validator economy?
Aaron, I would suggest that you wrap up your presentation ASAP because we are running out of time. It's just a time check. What we will do is we will also organize a larger, base of our members so that you can present, for a 20 minutes with a 10-minute Q&A subsequently. Is that all right?
Absolutely, Hari. So I kind of already touched on the validator economy.
Yes.
So that's completely fine. I'll move towards the team and close it up there. So at this point, you have Martin and myself here, and then we have kind of leaders in the product and development side. Zoiner, one of the leaders on the development side, specifically with a vast kind of experience in cloud and infrastructure Web 2, regional director at Microsoft, and building out the product at this point. And the remainder of the people that you would see here, these are all people that are advising the team. And you'll see Rashad and Paul, who I'm sure you'll recognize. But I'll leave this and then we'll wait for the next round. Thanks, everyone.
Thanks, Aaron. If any of you have questions, please, we will take it up, with Rishabh and Aaron later. So Sandhya, can you just introduce the next company, please?
Okay. I have two companies. I'll start with Sonia because she needs to catch a flight after this. So Sonia Choksi is in the entertainment media business, and she's using blockchain to take this forward. I'll ask her to share her story. I think you'll find it quite interesting. The second one is Oren Simon, who's based out of Israel. His entity is out of Malta, and it's in the new, both of them use blockchain, obviously. And he is trying to create the economy around contract workers and the future of working, leveraging them. So over to you, Sonia.
Thank you, Sandhya. Hi, everybody. Good evening. My full name is Sonia Choksi. I live in Delhi, and I'm joined here with my co-founder, Vish, and my colleague, Amitabh. He looks after growth and strategy. So three of us are here. Background-wise, I'm a filmmaker. I've been into film and television for about 19 years now. And I worked across fiction, non-fiction, India, abroad, everywhere. And through these variations, there were certain things that were very apparent and they were not changing. There were four, actually. One was accessibility. So even though we worked with the best of the brands, accessibility of the right talent, of the right performing artist, was not a solution just because we had better budgets or better teams, or the vice versa if we didn't have one. And on the other hand, the performing artist, no matter what sort of a level they were on, what did they know about the industry or not, it actually meant about being at the right spot at the right time. It boiled down to that. Or the network effect. What was somebody else saying about them? That's what got them all connected. While, of course, that is not the main thing of the judgment, but so it was. And it kept on bothering me for a very long time. So, I mean, fast forward, at some point, I and Vish got together and we said, let's give it a try if we can do something. This was the time by which technology was already impacting other sectors, like the whole search engine, the websites. They were already making things happen where it wasn't happening earlier. And that's what we were observing. But the challenge still was that the people of art, culture, media, and entertainment, I always say they're differently wired. They're not the very same people that the other people are. They leave the best of the projects just because they don't find respect, and they will take completely peanut kind of things just because they feel appreciated and loved, right? So their measurements are very different. So how do you kind of structure something which is so emotional? And even on the other side, it's very emotional. Of who do you work with is also very subjective. So those were different challenges, not the same as, creating a community and matching them with the employer. No, it was not. But we started out And it's been a while. Today we are about a 40,000 people community. We have 40,000 performing artists across all genres. And but even today, even in so much of an advancement of technology, the things haven't changed for them. I am talking about a time when social media was not so prevalent, but now it is. But even the platforms have begun to look like that. So what we have been on a mission is to create, not just create a community, but to make this community really become aware of what's possible. What are the things that are their skill, which is their art, which is their performance. That's their skill, and that they must be holding on to. But then also not to be ignorant about everything else, because that's business. It's all a part of it. And since it doesn't come to them as a very strong suit, they've been dependent on other people. It would have been fine if the other people and the entire thing was becoming an ecosystem, but the agent model hasn't really taken off in the art and culture entertainment segment. There are very few agents, very, very few. And they end up making it more like a business, like a typical business. So, which is fine, which is great at one point, but the growth of the performing artist and hence the potential to what they can contribute to the economy and to themselves just fizzles out. And so apart from making sure that they earn better revenue, we also want to take care of that. We also want to make sure that their artist, their originality as an artist is taken care of, and they grow on that. So we started with a website. We started with building the data forms. And the artists are not the people who like data forms. You ask them 2, 4, 5 more questions and they don't like it. So that was a challenge. But we have about 80 to 100 data points for everybody today. And that is what fuels in our search engine. So let me share the screen also, and I'll take you through. Is it okay if I share my screen and bring in the deck at this point?
Yep.
Yeah. Okay.
Just keep in mind time limits.
Yes,
So just get
sure.
to the
Sure. Yeah. So basically, understanding that these problems haven't changed over a period of time. So something really crazy has to happen now for it to have a shift. So our mission is to energize the creator economy. For us, the creator, though creator is used very largely as a big word, for us, creator means performing artists and people who work with them. So producer, directors, music composers, music directors, all of them are the creator economy. So what do we mean by when we say energizing? First thing is empowering creators. Empowering as in making them aware, bringing tools to them to work on once they're aware, and for them to have the legal structure, legal backing to fall back upon. All of this becomes a part of our work into empowering creators. Second is funding for content. Now, this is again, like an artist can create anything. They totally can come out with a new thing every minute. But one main thing which is required is funding. And most often they don't have. The ones who have it, put it out there, but it doesn't mean that what they're putting out there is a true representation of their artistic skill. It could be a lot more to do with their marketing. So the ones who don't have the funds to put in get left out, much behind. And that's another thing that we want to take care of. The third thing, the energizing part, is coming from the token ownership. So if that's a Match My Talent token, but the artist would have ownership into it. So we grow, they grow, they grow, we grow. Now, at this point, I'd like to take a nudge here. The Web 2 platforms, are made for brands and advertisers. They're not made for creators. While they're sitting on the creators' content, it is the creators' content which is fueling the entire thing, but they hardly get anything. So that's the shift that we're talking about from the token ownership. That's the mission that we are on, that the community gets all of that. They get paid for being discovered and for creating. And on the other side, the industry ecosystem, they have a better worth for their time and money that they put in. So they should be able to come up with better content, more layered, more textured content with the same kind of time and money. So how is that going to happen? What are we building and what have we built? So the point 1, 2, and 3 here is what we have already built. So at first step, we care for artist discovery. Now, artist discovery doesn't happen by writing actor. Nobody's just looking for an actor. So it's always going to be looking for 20 to 25-year-old fat actor from Navi Mumbai. There are going to be some very specific things about that you have in mind, or the script about that actor. So that discovery is a very unique process. So what we have built is that unique process, that we have understood that unique process, and we built that. Now, behind that process has to be the people. So which is where we are. We are the largest performing arts community. It's an identity ecosystem. Like I said, there are 80 to 100 data points for each person. And that's the kind of a professional depth that we understand them in. The third point is that it's an NLP and an AI search engine. So, so the entire engine is not a query built thing. Of course, nobody will make that in today, but that's what we have really invested on. So you can think about in as much detail as a creative person does, and type it out on the engine, and you get the result. So all of this is already built. It's ready. Now what we are moving and integrating on is the blockchain. And why we're doing that? Because blockchain just came well in time, just the perfect time for us, because all of this we were doing, but the content ownership part is not something that was really getting cracked, to that level in Web2. Because how do you give content ownership to somebody if it's going to be on YouTube, or if it's not going to be in anybody's control? So for us, blockchain is a very, very natural part, an extension of what we have been doing onto blockchain, to bring in transparency, to bring in content ownership, to bring in token ownership, for them to have the funds, for them to have the kind of the strength and control on their own thing. And all that that's the part that we're going to build now. So straight away, the question that matters to you, why invest in us? Well, simply, the market is huge, right? It's so big, but it's an undocumented. There's no data here. It's $110 billion market, out of which 50 million are creators, these performing artists and the people who are in the art and culture segment. This is the traditional market, not the blockchain market. And year on year, last 8 years, the CAGR has been at 98%. Like 8 years, next year is just going to become 200% any which ways, whatever one does or not does, it's at that rate. And then come blockchain, that has been, the market is at 1.54 billion. And there also the CAGR is 33%. So it's all huge. And blockchain has hardly been around. It's not even like been around for a couple of years, and already the returns are like this. That's what the market size and the captured data says. But guess what? What's the 2% here? So the 50 million people who are the creators, only 2% people are fully employed into this process. Like, this is what they earn their bread and butter for. The rest of them are freelancers, once in a while, seasonal. So our question is, if this 2% is actually contributing to the market size of 110 billion, then what about the remaining 98%? 98% is the kind of people that I began my conversation with dealing with. They're seen one day, they're not seen another day. And it's not that they don't want to. They don't have the structure to get into the industry. They don't have the wherewithal, because somebody has to refer to them. Somebody has to say something nice about them. That chain is not going to break ever. That chain is only going to break if there is structures and processes meant and designed, knowing them, thinking about them, putting them first. That's the only way that structure is going to change. And since it's 98%, we might as well do that. So this 98% segment, we call it the creator middle class. Not just we, that's a term being addressed, because it's such a large piece. It has to be middle class. We are addressing this middle class. And what are we doing with them, for them? We're enabling discovery for them. Like I said, discovery for them is very different. They're very differently wired people. The people who look for them or their content are very differently wired people. They are not going to sit through forms and statistics. And like a very simple example, an artist would not be known by how many years of experience it has. A programmer, a developer has a regard. Like, if you've been a programmer for 5 years, it matters. An actor for 5 years doesn't mean anything. It really means, what's the work? Can I see the work? Like the films that you've done, the acts that you've done, Where does one show that? On a social media? No, that's social media. That's not what on an Instagram or a Facebook, that's not what where you show your work profile. It is not designed for that. It's not meant for them. Can we actually search for people on Instagram and LinkedIn or anything like that? No, we can't. You type looking for 30 to 35-year-old male actor, pot belly, you're not going to get anything. But that's exactly what the community looks for. So that discovery model is what we're addressing. Then comes the monetization tools. Like I said, the incumbent platforms haven't been thinking about them. So we are looking at a structure where their monetization is taken care of. They need to monetize. Third is the learning and growth. Most of the people in the art and culture community do not get trained professionally. There aren't training systems existing. Very few, far and few, and that is why it's all often termed as a hobby, because you just end up leaving because it does not comply with your normal academic system. So that's another funnel that we're building. And fourth is the financing, which I said is about funding the creation process. So we are actually defining this creator artist marketplace. We've been doing this for a bit, and we're actually defining all these terms. We're already the category leaders, and by category I mean the performing arts category, the producer, director, music composer, this category. We're already the leaders because we're the only ones who have this ID ecosystem and the search which works for them, the search that understands them and then gives the kind of results that matters to somebody.
Yeah. Sonia, we'll need to wrap up soon.
Sure,
we're well past the time.
Sure. So I'll just pass the baton to Amitabh, my colleague, and he will take us through the next slide. So, basically we have the database, we have the artist acquisition insights, and we have the unique search engine. Just an example of how we operate is through a lot of IPs and events. Malhar is one of our favorite IP. It's a virtual film festival. By our very, very humble efforts, no resources, we have a basic thing. This year, we're running the festival, and we've got about 1,000 films globally. This includes 55 countries and 39 languages. So that's the kind of need for the creators to be heard, to be seen. That's on that. And the Malhar is going on blockchain this year. So we have NFT tickets for the festival, which have vested qualities and uniqueness to it. The NFTs have, like the NFTs have, they have many, many benefits, but Malhar is a festival that our last year's participants have asked us to create, so that's the kind of value that went in. We have partnered with Polygon. We're very, very excited about that. Of course, you would know Polygon very well. Our reason to choose Polygon was, again, working with them is low transaction costs. They're very approachable. They're highly scalable. And they're like Ethereum on steroids. So we've partnered with them, and we're talking to more people. And our partnership is about marketing and PR at whatever stage we want, and going ahead and creating dApps with them. So Amita, why don't you just help and take over the
question before Amitabh starts. Hari, we have another minute or two to close this.
Yes, please.
Okay.
Okay.
So Amitabh, 1 to 2 minutes. Yeah.
Okay, just Sonia, can you just shift the slide into? If you could just change the slide, Sonia. Hello, can you hear me? Can you hear me?
Yeah, we can hear you, mate.
Yeah.
Yeah. Okay. So this one. Okay. So good evening, everyone. I'll just take you through how we are creating value and what are the various elements. So Sonia has taken you into detail, but I'll just touch upon them once again. So the basic building blocks of what assets that we created is an artist ecosystem that Sonia talked about. There is a very contextual and very high accuracy search engine. There are artist acquisition channels that we have acquired over the years in terms of how we acquire at the lowest cost. There is an intelligence in our search algorithm, and there are various data points. Now, this entire thing, this becomes the building blocks for the service and the value that we bring to various stakeholders. Now, talking about the artists, now the first thing that they're looking for is opportunities and being discovered, and the various tools for success which we went through. On the other side of the coin are businesses who are creating those opportunities. And while they create those opportunities, they're looking for a very wide selection of people or the artists to be searched. And they're also looking at the convenience of, let's say, a mobile or a web to do all that. We also have in our roadmap much later audiences who will come in and will be watching this content. And lastly, brands. So I'm talking about brands here because once we have a trinity of a large scale content, we have good audiences, then brands will definitely follow because we'll be able to provide them much higher ROIs on the various marketing assignments. Now, simply how do we monetize this entire thing? So it's very simple. On the artist creator side, we are creating something called as a tools for success. Various tools for success will help them discover themselves and monetize themselves. Now, just to give you an example, a simple subscription model here will be working at like something like 5,000 rupees per year, which against a global benchmark of 150,000 per year is way conveying value for both what we are going to offer. On the business side also, there is a subscription model which works from 5 to 50,000 per year. And again, on a global benchmark, it compares extremely well. Brands will come much later. We are not really looking at how we're going to monetize them, but we know that we will be offering them a cost per converted user, which will be closer to the lower end of the funnel. And it will not be about traffic, and it will not be about leads. It will be actual cost per converted user, and we'll be able to do that because we'll have very rich first party data, which the brands will like. Okay, so this is how the entire P&L will look. These are our projections, and these are, we think, are quite a realistic projection. So we have mapped this out till FY25, 2.5 years from now, 3.5 years from now. And if you look at, so it's the various aspects of the revenue, how it breaks. But I would like to draw your attention just to the creator tool side of it, which is actually the bread and butter for us and will be the most meaty aspect of the revenue. So that revenue hits almost 28 million at closing of FY25. And this looks quite reasonable to us. And the reason why I say that is that because it's a very huge market. It's such a huge market that there's no point looking at it and trying to sizing it up from a top-down aspect. In fact, what we have done is that we have asked a very simple question to us: whether in the next 2.5 years we are able to acquire another 2 lakh plus artists on a platform or not. And when we look at the efforts that we have done till now with very meager resources,
we need to wrap up.
Okay, so sum and substance of this is that from an investment perspective, with an FY25 cash, I'm looking at a cash on cash multiple of 35x and internal rate of return of 119%. And these details, I think we can share with you, and we can have a greater discussion on this. But this is what it looks like. And this actually includes an initial investment of $2 million. These cash flows. And also I'll end with saying that there is already an established value in creator self-monetization. There is a sample of some of the big names that are already out there who have been funded aggressively. And if you look at this in detail, we are actually taking most of the elements or services that they are providing. It's just that we are just starting out, but I think the sky is the limit for us. And I would like to leave everyone with a small thought that why can't we make in India for the globe? Because it's the same global services that everyone is seeking, all the global creators. And sitting in India, we are in a very good position to provide all that. And this is our extended team, where it's a very good balance and mix of corporate development and corporate strategy, along with people on the product side and also people on the crypto side who are both investors as well as developers of crypto products. So we have a very balanced team helping us out in this venture. Thank you.
Thank you. Any questions for us?
I'll leave it to the others.
I think we will ask you questions in the other, presentation, which we will ask you to make, with our larger pool of investors today. Because of time, sure, we will allow Oren to present, and we will come back to you.
Absolutely. Thank you so much. Thank you for your time.
Thank you, everyone.
Thank you, folks. All the very best.
Sorry for rushing you through it, but I think we're already running late.
That's fine.
Okay. Thank you, Sonia, Amitabh.
Bye.
Oren, over to you. Sorry for the delay. Usually we finish on time, but I think today we just overrun.
Not a problem at all. Okay, you see my screen?
Yeah.
You hear me loud and clear, so we can start.
Yes, I think we can hear you.
Okay, now just need to make sure that the machine works. Yeah, okay. So my name is Oren Simon. I'm an Israeli and a German citizen. My company is based in Malta, and I am an aeronautical engineer by profession and a computer scientist over the last 40 years. I am the founder and CEO of Business Dynamics. And as you can see, Sandhya is on our team as a mentor and advisor. We are building the new economy workplace for managed professional and independent contractors. I am an independent contractor since 1990. And sorry, it's jumps. And all our team are independent contractors. We build an environment for people like us. When the pandemic hit and everybody was forced to go remote, we had an advantage. We are working remote as a normal mode of operation for us forever. We're all independent contractors. And especially between us, this team, we have over 100 years of managing remote operations of freelancers between us. What we specialize is the management of flexible workforce. So we find the need, then we find the people, then we hire them, then we manage them. And this is everywhere in the world. Because we're working with flexible workforce, because we're working with independent contractors, we are very, very cost effective. You pay for exactly the amount of work that you need. And we keep our accounting as simple as possible. We charge what our contractors charge us plus 23%, so it's transparent, it's obvious, it's clear. The reason we created all this is because when we started thinking about the world of independent contractors, the world of freelancers, and given the backdrop of the big resign of the pandemic, everybody works from home, people don't want to go back to office, people starting to think, do I want to be an employee? Am I capable of becoming my own manager? Do I want to go, on the other hand, to the instability and unpredictability of gig work? Is there a way between gig work and being an employee? And another dimension of the same that was exposed in the pandemic is that remote works very well for soft skills. If you're a graphic artist, if you're a code writer, if you're a text writer, it's very easy to work remote. But if you're a mechanical engineer out of Shenzhen in China, you either find work locally, or you need something like us to provide you with work. And this is the kind of new thing that we're bringing onto the table. Our mission is to create work for people like us, for independent contractors like us. It's a purpose-driven company. Our goal is to distribute wealth, to distribute work to people all over the place, and especially to sell business services to Western rich companies and to move the work to where they operate, manufacturing, suppliers, logistics, so that we can create a more, I would say, flat world. And when we looked at the potential for such independent contractors, professional independent contractors worldwide, we come to about 1 to 1.2 billion individuals who have the desired skill sets, but usually don't have access to finding work online. It's a market of about $600 billion. And going to this scale created the challenge that I am wanting to present to you today, because until now we can operate projects and we're doing it with our makeshift technology. We use all kinds of systems to get it done. But in order to scale, in order to get to the millions and hundreds of millions of people that we want to coordinate. At the same time, we need a technology stack. And lucky for us, the transactional layer of such a technology stack, we already have blockchain. I come from distributed computation, from artificial intelligence for the last 30-something years. And the blockchain for us is a natural kind of scaffolding to build on it a uniform ledger of everything that happens in our environment. We then want to develop artificial intelligence and machine learning tools to go and look into the accumulated ledger data in order to optimize and in order to make sense out of it. And to put on top of it a layer we call swarm intelligence, which actually manages who does what, where, when in this big environment. Now, managing something this size requires us to leave all kinds of premises that we were used to, like, for instance, the move from a for-profit company into a for-purpose company that makes a profit, or from a hierarchical company moving into a network kind of company. At a more fundamental layer, in order to cope with the levels of complexity that we are trying to harness, we need to go into a biomimicry environment of metaphors and to seek resilience and the ability to optimize from sources of inspiration that are available to us in nature. When I was in university doing my education as an aeronautical engineer, I had the great opportunity of being sent to look at griffon vultures and how they soar and how they use the tips of the wings in order to navigate themselves with minimum energy spending. And this ingrained in me some kind of understanding that when I'm trying to figure out a technological solution for something, the best way I can do is find an analogical scenario in nature and go and see what nature does. So we think in terms of an organism that is composed of people and technology. Essentially, we are building a metaverse, and we are building it in a way that will allow us to serve business clients all over the world in deploying teams and individuals of professional skill sets for periods of time, applications all over the globe. When taking an undertaking like this, the technology challenge that we are trying to build, the question of how do we deal with IP is a key question. And it's a key question because protecting IP, first of all, is a moral question, whether you protect your IP or share it with the world, but also it's a financial question because protecting IP of this type is very, very expensive. We opted to go with our heart and go copyleft, and decided that we want to develop knowledge in our space-specific area of manage remote flexible workforces and share it outside so that whoever wants to use our knowledge and our understanding is more than welcome. We are taking here with the copyleft idea, we're taking something that the engineer in Intel in 1976 created when they created the code for the 8080 processor. They created the concept of copyleft, which means you can take this code to operate this processor, and as long as you don't charge on it, use it. And we're using exactly the same principle. We will share, and we are sharing already, all kinds of bits of knowledge and know-how, and we are happy with people to use it and share with us their experiences. More than that, by going copyleft, we are also linking ourselves to open source. I myself was a contributor to the Linux Foundation when it started. And we believe in this approach, both from ethical and from practical purposes. We are trying to build a technology platform that is, I would say, really complex. And debugging something like that and making sure that we have the right tools working in it. If we are going to communal development, will be that stronger. But more than that, because we're developing a ledger that sees everything and everything is recorded, and because we are building artificial intelligence machine learning tools that go under the skin of all the people who are working for our organization, and we are talking about large numbers of people, then the ethics of the AI becomes an issue. And by doing it open source, we can kind of guarantee that the sunshine disinfects whatever goes in. So this is the direction we are aiming. And it is really important because we are building an interface that its premise is that when you work, you're on. When you are at work, your interface is online, and this interface will know where you are, it will know what you do, you will be communicating with, so it's very intimate. And we have to make sure that our ethics is very, very on point. In order to get the ball rolling, we identify a low-hanging fruit service that we can address. We found a must-have solution for the supply chain management area. In 2019, McKinsey said that supply chains are inherently human, but supply chains have gone into inherently transactional because operating people, especially operating people abroad, is very difficult. We specialize in remote management. We can put a mash of skilled individuals visiting suppliers once a week, once every other week for a few hours, a very cost-effective, very professional solution. We take all the hustle of managing it, and we do it at the cost of the actual contractors plus 23%. We can live out of revenue, and we can develop, but relatively slowly. In order to really scale up, we need a technology boost, and in order to build this technology boost, we need an investment. We estimate that we will need around $3 million all included in order to bring us into a break even with the technology development already within 24 months. And our projections show in a moderate scenario that we will be in the hundreds of millions turnover per year in 5 years. All in all, a blue ocean strategy for something very much needed by independent contractors on the one hand, and by business clients on the other hand, managing remote flexible workforces, enabled by very robust technology that starts with a blockchain that kind of logs everything. That's me if you have any questions.
I think it's very interesting, and it's a great idea. I think this is definitely looking, pretty futuristic, and I think
the future is what we do today.
Yes. So very impressive.
Thank
it depends on how you execute it.
Yeah, definitely depends on how we execute, and especially since we take the challenge of open source. It means that we are not going to, on the one hand, we're not going to burn huge amounts of capital in order to develop the technology. But on the other hand, we are kind of inviting all kinds of variables into the system that we will need to manage. But I think if to judge from experience in participating in collaborative open source modes, the moment you manage to get the right geeks aligned with the vision and with the purpose, and remember that most people who will contribute to code are freelancers themselves. We are for them a workplace. We offer them to get out of the gig economy and get some stability in their life. I think that this challenge will be met with very fast-moving technology. And I think also because we are serving business entities that have an interest for such a platform to exist, because currently they have a problem of reaching touch points with participants over a traveling distance. And after the pandemic, traveling is not that a good idea anymore. So, and on top of it, it saves a lot of emissions, which is also a good thing. But we don't need to travel. We're already here. We're all over. And we have developed a systematic network of capabilities. Like, for instance, if we need to find someone at a place, we have access to virtual assistant in that location, which is very easy to find online. But they can go into the local job boards and find that engineer in Shenzhen or that mechanical engineer in Mumbai in a way that online is not possible to do. So we bridge this gap between people and technology and really create this holistic environment so that these 1.2 billion independent contractors can find employment, can find relaxation. Because I can tell you that the level of anxiety of a contract worker when a contract that is feeding him and paying the rent is getting towards its end, and you don't know when the next one is coming, the anxiety is high. You can really not plan. It's very difficult. But we go further. We say, okay, independent contractors are people with rights. It is not fair that you take someone like me, 30 years professional experience in developing algorithms, really complex one, but because I am a freelancer and not an employee at Google, then I need to hustle. And we want to take that out of the equation. We want to create a docking station of sorts. And I believe, and we all believe, and we are all freelancers, we understand this, that the moment we offer things like, once you build the capacity of work, we will put you on a retainer as long as the project lives. So you know how much you're gonna make. We are going to build a collaboration university to teach people how to best perform in remote teams. Because this is a profession. It doesn't happen out of magic. You need to know how to do it. And of course, a very, very profound technology stack that will allow us to do it in large numbers. You're on mute, Sandra.
I should probably say, I think Oren's team, you have 15 different nationalities. And
17 now.
17, and including his general manager is from Ukraine. So the business continuity planning had to be done really fast and tested out in a fairly, let's say, volatile environment. So in some ways, I think they looked at all kinds of situations there.
I would say even more than that. Working with independent contractors bring with it what we call evaporation, or other terminology for it is ghosting. When you are working with someone and you are working on a regular basis and without any notice, they are out of contact. And this is something that when you have an office and people come to work, you know where they live, you can go knock on the door. I cannot go knock on the door of someone who is from Argentina and working for me. So planning for contingencies, planning for no contact, and creating the contingencies, this is a layer that we are very much aware of. We are now, in the way that we work, every time someone has a responsibility, there is someone who is shadowing, and there is always a resilience path for failure. Obviously, it has limits. You do risk-benefit analysis and you stop it at some point. But out of experience, we are very, very good at reacting very quickly to things changing. I think part of it is because we are freelancers. So for us, the dynamics of doing things is very immediate.
I know we've really overshot, Harry, but it obviously seems to have interested at least a couple of us who've been on this call.
Thanks, Oren, for your patience. You were right from the beginning. You were very patient. So, thank you very much.
I am an independent contractor. I'm an independent contractor. I used to be patient.
On behalf of all of us at Indian Angel Network, really thank you for sharing your
Thank you.
business model. It was very interesting. Sandhya, over to you.
Thank you very much.
For closing
No,
remarks.
No, but thank you so much, Oren. I think we'll get back to the next steps on how this will go. I don't know how we take this forward if we do.
But we will definitely get back to you, once we do our internal planning.
Yeah.
Lovely. Thank you very much.
Thanks so
Sandhya, for
much,
the
Oren.
opportunity.
Thank
Thanks,
you.
Hari.
Thank you,
Bye.
everyone. Thank Rishabh, Paul.
Thank
so
you.
much.
Thank
Bye-bye.
you. Bye.
Bye.